Hey, welcome back to another episode of our City by City Market Pressure Review series. And today we're looking at Launceston, the second largest city in Tasmania. Launceston, like many Tasmanian cities, have boomed from 2017 to 2022. But since then, growth has been very slow. Last year, the growth was less than 2%. So now, how is the market looking, and where is it going in the short term and medium term? Let's try to find out today with 10 charts. Before we go through the charts, if you're here, chances are you're serious about property investment, whether you're just starting out or looking to scale up. But to do that, research alone is not enough. If you're ready to make smart and data-backed moves, why not take the next step? InvestorKit team offers a free 15 minutes discovery call. It's just a short call to understand your goals and see if we are the right fit to help you build your portfolio. If you're interested, head to investorkit.com.au or check the show notes below. Alright, let's dive in. In these 10 charts, we'll be covering the economic and demographic trends, the sales market trends, the rental market trends, as well as the affordability trends. And in the end, I'll be giving you our forecast on where Launceston is going in the coming 6 to 12 months. Chart 1 is an overview of Launceston's market performance. Incoming supply is low, that's why it's scoring a 5. Rental pressure, rental yield, and affordability are all healthy, scoring 4 out of 5. Price pressure is improving, but it's not really high yet. That's why it's a 3 out of 5. And growth cycle position is relatively weak. I will explain that more in later charts. Now, chart 2, the population and migration trends. Overseas migration has always been the main driver of Launceston's population growth. Now, overseas migration is still strong, but internal migration is deteriorating. Before the pandemic, net internal migration was already negative, but they were losing very few people to other cities or other states. But now, as living affordability worsens, and based on the survey, the lack of stable and well-paid jobs, a lot of young people are moving out of Launceston and also Tasmania. And the loss in internal migration has led to the negative population growth in recent years. While this population growth is not the only contributor of housing market growth, it is an important influencer. So in the coming years, if the weak population growth continues, the housing market is unlikely to boom as it did from 2016 to 2022 when population was booming. Now, the local economy. Although population growth isn't particularly strong, the number of job opportunities is still quite elevated. So the combination of a decline in labor force and an increase in job opportunities has led to this extremely low unemployment rate. Now it is stabilized at around 2.5%. This low unemployment rate is not just happening in Launceston, it's actually across Tasmania, and it'll very likely lead to high wage growth. In fact, in the first quarter of 2025, Tasmania actually saw the second fastest wage growth across all states. So over time, the fast wage growth will eventually close the gap between wage and living cost and attract more young people to stay instead of moving out. And then housing demand will be improved, which would benefit property price growth. Now, sales market trends. Pressure in the sales market is now just moderate. We are seeing signs of improvement, but the improvement is not strong enough to drive prices up yet. So one of the signs is the decline in days on market. As we can see in chart 4, it's been declining gradually in recent months. However, price trend lines has been quite flat. If we look at the 3-month rolling median trend line, it's actually been trending downward in early 2025, not showing any momentum of a strong recovery. And we can see the moderate market pressure in demand and supply relationship as well. Number of listings, which is the supply level, has lowered over the past year. And in the meantime, number of sales has been quite stable. So as a result, inventory dropped from last year's 4 months of stock to the current 3.4 months. However, it is not keeping dropping. Since early 2025, it has stabilized at this level, indicating that the market is at a balanced status or equilibrium. We need more stimulus for it to further tighten in order to see real growth. The rate cuts in the coming year and the affordability improvement it will lead to will very likely be a stimulus. Now, incoming supply. In Launceston, incoming supply has always been relatively low. Even at the peak of construction activities in 2021, the building approval rate was just above 2%. And in recent years, it has always been well below the 2 to 3% balanced band. So it's safe to say that in Launceston, we do not see much oversupply risks. And now, cycle physician. Launceston has boomed from 2016 to 2022, making its last 10-year annualized growth 7.6% and last 5-year annualized growth 9.5%. Both are higher than the long-term average of 5 to 7% per year. So the outperformance in recent years, combined with the relatively weak population growth and the moderate market pressure, growth is unlikely to be extremely strong in the coming years. What I mean by that is if market pressure increases, healthy and above average growth can still happen, but the growth won't be as dramatic and long lasting as what happened in 2016 to 2022. Rental market is actually tightening. Vacancy rate has been declining since 2023, now sitting at 0.5%. That is even lower than where it was during the pandemic boom. And because of this improving rental market pressure, we expect rents to continue growing in the coming year. Rental yield has been improving over the past 2 years, now sitting at 4.7%, a quite healthy level. And because of the tightening rental market conditions, this number could be even further improved in the coming year, attracting more investors to come back to this market. Now, affordability. The affordability in both the sales market and the rental market have decreased significantly over the pandemic boom. One thing very interesting is before 2022, buying was much more affordable than renting. That's the case of many regional markets before the pandemic. And now, as prices have surged so much and interest rates are staying high, renting is actually more affordable than buying now. And that is another reason why we believe rents will continue growing in the coming year. But over time, as interest rates go down and rents keep going up, eventually the affordability gap between buying and renting will be closing. And that is when we can see more housing demand shift from the rental market to the sales market and drive prices up. So what's going to happen in the coming 6 to 12 months? Launceston's house market is now in a balanced status. There have been signs of improving market pressure, but the improvement is not significant enough. So in the short term, which is 6 to 12 months, price growth is likely to continue to be moderate. Yield is likely to continue increasing. Sales market affordability is likely to further improve as interest rates go down. All these signs, all these indicators, they're not pointing to a hot market in the short term, but they are all pointing to a steady recovery. So that's Launceston in 10 charts. Comment below if you have any questions. I'm John, the Senior Research Analyst at InvestorKit. I'll see you next time.